Hey guys, yeah, if you don't mind sharing with me, where are you guys tuning in from? All right, so, and if you can guess where I am hosting this from, you get bonus points. Right. Yeah, if you don't mind sharing, guys, where's everyone tuning in from? Okay, you got Chua from Kuala Lumpur, very close to me. Oh, Singapore, Judy from Singapore. Nice, very nice. We're in the same country then. Oh, unless you're guessing that I am from Singapore, right? Oh, we got Madrid, which is Spain, right? Which means it's probably early morning there, where you are coming tuning in from. Okay, Dennis from Singapore too. Perfect. Thanks for tuning in, everyone. Right. I'm not sure if this will record. It should be, it might be, right? But there's no confirmation to it yet, right? Just treat it as it might not be recorded yet. Um, so yeah, I'm last I heard it might not be, but because this is the first big webinar that we're doing for the Axi Select series. So a lot of it might, the technicalities, the administrative stuff, I might not be too sure. I hope it has too, right? I hope it has a recording too, Dennis. All right. So but we'll see. We'll see later on. All right. Now let's begin today's session. Right. Today's session, we're talking about like the top 5 mistakes prop traders make. Okay. Right. Most of you guys were familiar with Axi Select, right? It's a prop trading. I'll explain it in a bit. But let's move on to, of course, the disclaimer first. Remember, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. Okay. Now, for those of you guys who are wondering what's Axi Select, basically this is Axi Select, right? It is, it's like as long as you have a live account with Axi, right? I think minimally a 500 USD account, right? You can then take part in the Axi Select program, right? The better you trade, then they will fund you, right? So I think they have a few stages to do that. Basically, I think like phase 1, phase 2, phase 3, phase 4, but at I think it scales up all the way to $1 million, right? So yep, I'll just give you for those of you guys who are wondering what are prop traders, these are what I mean by prop traders. People will take the proprietary trader test, right? Very strict criteria for you to pass, right? And of course, with Axi Select, you pass it, you get $1 million. That's great, right? I think, but that is probably at like the 5th stage. I'll share with you what I noticed a lot of mistakes that traders have been making. And of course, this can be applied not only in the prop trading space, but even as a normal trader, it'll be super duper useful for you guys. Okay. I won't dive too much into this, but basically, yes, you with 500 USD, you'll be able to start their program already. And at the pro stage, at $4,000 USD, you can manage up to $1 million and get 90% profit share. That's ridiculous. That's really good, right? So if you have an Axi account or you don't have an Axi account, go ahead, get it, right? I think it's fun way to get into the world of prop trading, managing real funds from them. Okay. Now, let's move on from here. Okay. What is the agenda for today? We'll be talking about a few things, right? What trading instrument should you focus on, right? Because a lot of traders say, hey, should I be a euro dollar trader? Should I be should I be gold? Should I focus on gold? Should I focus on S&P 500? Right? What time frame should I use? Right? Some people is like, should I do the 15 minutes time frame? Should I do the 1 hour time frame? Right? Which indicators do you use? Which indicators work better? Right? And if you guys, of course, as we are listening to this webinar, feel free to let me know what indicators you guys use, right? Especially in trading. And do you guys focus on a particular instrument? I might be able to provide some additional insights into there. Okay. Now, what lot size should you use when it comes to trading? Where should your stop loss and take profit be? And should you set a daily or weekly target? Okay, these are some of the things that we can definitely we'll be looking at in today's session. Okay, now a little bit of information about me. Introducing your host, my name is Desmond Leong, a founder and CEO of Rocket. My company powers the Axi Select community. So you go to select.axi.com, right? That community is powered by us, and we provide a lot of the research that a lot of research and webinars for many of the world's largest like brokerages and financial institutions, right? So I myself am a prop firm trader. My team, we've passed the prop firm test more than 15 times, right? Won quite a few awards of best FX research and best equity research from the very prestigious technical analyst awards, right? So we know what we're doing, right? And what I can tell you that I look pretty young. I consider myself pretty young, right? You don't need to have a master's in financial engineering or 5 years of experience in Wall Street to trade well. Okay, you just need to learn the right things. I'm not going to sell you anything today, right? Because this is a webinar sponsored by Axi, right? So I'm just going to try to give you as much value as possible. What I want to encourage you guys to do is that we rarely have time at the end of the webinar for questions. So if you have questions, please ask them right away, right? Ask them in the chat. I'll do my best to get to them. I literally have another screen open over here just to answer questions that you guys have. Okay. Now, yep, this is the certificate you got. So I easily passed 100 grand account, still using it to this day, right? And yeah, this is importantly is to have the right strategy, right? And I'll be sharing with you what goes into creating a right strategy. Okay. Now, moving on. Let me just check, make sure my Q&A has no. I can annotate here too. Okay, moving on from here. The top 5 mistakes, right? Top 5 mistakes I notice traders make. The first one is mastering one instrument. Okay, so it is like through a lens. Imagine you're mastering one instrument. You're actually just seeing the market through one small like tunnel vision, right? I see a lot of people that like to say, I want to be a euro dollar trader, or I want to be a gold trader. I just love trading gold, right? Nothing wrong with focusing your strategy on gold, but to master one instrument, you actually need to master a few instruments. What do I mean by that? And let me just see if I can draw an annotation over here. Highlighter. Yeah, I can see my drawings, right? No, you're not able to see my drawings. Are you guys able to see my drawings? I don't see it on my screen. Are you guys able to see what I'm drawing over here? Yes. Okay. So maybe it's not. Okay. Cool. Thanks. So how does that work? Imagine you're a euro dollar trader. Okay. If you are a euro dollar trader, right, and you notice that there's support level over here. You think that price is going to bounce, right? Price is going to bounce upwards from here. You're thinking that price is going to bounce. This is the support level you're looking at, right? So you're looking to enter over here. Now, if you only master one instrument, all you have is this support level to determine whether you might be right or wrong. But the thing is, the market moves in tandem. Okay, and this is done through correlation. For example, when euro dollar goes up, who can tell me what instrument would go down? Does anyone want to take a shot at this? What tends to go down when euro dollar goes up? Anyone want to take a shot? Want to take a guess? You got Chiwa suggesting could it be Aussie dollar? Aussie dollar, not really, actually. And it might be better for me to share my dollar and yen. Dollar, yes. Yen, I will show you how we can see whether yen is correct later on. Okay, I understand the logic, Dennis, when you said dollar and yen, but dollar franc actually moves in tandem very well, right? USD CHF, right? Dollar franc. So if euro dollar goes up, dollar franc tends to go down. And DXY2, dollar index, which is the pretty similar, is a measure of the USD strength, right? So what it means is that if you're expecting a bounce on euro dollar, technically at the same level, you should be expecting a reversal on dollar franc. right? Imagine if you wanted to take a trade on euro dollar and you notice that dollar franc has already broken this level and is starting to like have a bullish breakout. Okay? When that happens, that is your sign that there's a disturbance in the force, right? There's something is wrong. Because if you're supposed to expect a bounce on euro dollar, that means dollar franc should reverse. If dollar franc is starting to do like maybe it's starting to have a breakout over here, right? Before the bounce on euro dollar, that means there's a lot of bullish momentum that is suggesting it's going to go up. This level where you expect the bounce to happen on euro dollar might be a false level, right? You might instead see it break through here instead. You can only know that if you use correlation. You can only know that if you master other instruments. And the trick here is correlation, right? Because think about correlation as like double confirming, triple confirming your idea, right? Because if something, you need the stars to align, right, to tell you if your trading idea is going to work out or not, right? So in this case, if you really think that euro dollar is going to bounce and dollar franc really starts reversing, we know that it sounds correct. There's nothing that looks amiss over here. Okay, so this is how you can use correlation. I mean, we have Aussie dollar and Kiwi dollar, AUD NZD, right? AUD USD and NZD USD. We've got euro dollar, which usually is compared with dollar franc and DXY, right? Got pound dollar that's usually compared with pound yen, euro yen with pound yen, right? And of course, we got the indices, we got gold, right? There's a lot of different things that you can use to compare. You don't need to study everything, but to master one instrument, you need to master the related instruments. Okay, a few of them. That's the first thing. That's the first mistake I notice traders make is that they are very caught up. They're very caught up in mastering one single instrument. Nothing wrong with that, right? Just that remember, to master one instrument, you need to master multiple instruments. Next thing, let me erase everything off here. Oh, it's staying there. Just let me see how I can erase all of it. Okay. Okay. The next thing, which indicators to use, which strategy? Okay, we have the reversal traders, we got the breakout traders. All right. My caveat here, my strategy, which I use quite successfully, right, is actually it's a little bit of a combination of both. For example, this is what we mean by a bullish reversal. This is what we mean by a bullish breakout, right? A bullish reversal is where looking for a price to bounce. Bullish breakout, looking for price to break out of a particular kind of like resistance, right? So the good thing about a bullish reversal is that you have good risk to reward. The bad thing is that you have momentum going against you, right? What I mean by that is that, for a bullish reversal, if you catch it right on the dot over here, right, you can put your stop loss maybe over here, right? And you catch the bounce, you get a very, very good risk to reward over here. The bad thing is that the market is naturally, the momentum is going against you, right? You got bearish momentum leading up to your trade over here. So yeah, momentum is working against you. Maybe you think that it's going to bounce and it comes down and it stops you out. That's a bad thing about reversal trading. Now, breakouts. The good thing is momentum is with you. Got momentum of prices coming up. And when a breakout happens, right, perfect, momentum will carry you out. The bad thing, and we've all experienced it, is the fake outs, right? That means you come up here, the market suddenly comes down, comes up, comes down, and then maybe it breaks out. Or sometimes it doesn't break out, it comes back down and you get stopped out. So you need a lot of breathing space. You need to put your stop loss like very far away. Give it that amount of breathing space so that you don't get stopped out by the fake outs. Or a lot of, because technically, if its price is rising, what we've identified over here is resistance. When price reach resistance, a lot of fighting happens, a lot of volatility happens. And if you don't place a stop loss or take profit correctly, you might get stopped out. Correct? So bad risk reward or you get faked out. Now, what do I think is the solution to this? Rather, is this. It's the concept of playing reversals within a breakout, right? So some people call it the pullback, some people call it the overlap. I call it the overlap, right? So what you're looking for is you get the best of both worlds over here, right? You get the best of both worlds, right? The bullish overlap, you're waiting. You ideally need to wait for a level, a key level, right? This level need to be respected once previously. And the next thing is that price needs to break out from here. See, it broke out from this big resistance level. The more times price might have tested this level previously, the better. Because when it breaks out, what you're looking to do is to play the bounce from the reversal. Play the bounce from the reversal. So you're still playing the reversal within a larger bullish momentum. Same thing here. You're playing the reversal, right? The bearish overlap here. I think this would be your entry, right? You're playing the reversal over here, and you're playing it within the larger bearish kind of momentum. Okay, so that is how you can have both the best of both worlds, right? Momentum is with you, the larger momentum is with you, and because you're playing the reversal, you have good risk to reward over there. Okay. Now, indicators that people use. What I've learned over the years, right, is that people tend to try to look for the best indicators when it comes to trading. Okay. I will share with you my perspective, 10 years trading, what I feel, what I've used. The lessons I've learned rather, and how I finally combine a set of indicators that's helped me pass the prop from challenges. Basically be a profitable trader. Okay. Now let me show you guys over here, right? So this is what I mean by it. I call it stacking probabilities. Okay. What I mean by that. This is what I showed you previously. This is a bearish pullback. Okay. A bearish pullback, price is pulling back to this level over here. Now, by itself, it's only the bearish pullback, but wait, it also happens to be in line with a channel, bearish momentum. So we got resistance and we got bearish momentum. But wait, there is an Ichimoku cloud, right? I tend to use just the Ichimoku cloud. I take away the Takan-sen, Kijun-sen, all that stuff, and just look at the cloud. Think about it as the clouds in the sky, right? If there are very, very thick clouds in the sky, dark clouds, you know that it's likely going to rain, right? And if the skies, look like it's very clear, right? You know that it's unlikely to rain. So the same thing as the Ichimoku, the bigger the cloud is, the stronger the resistance. Okay. And if the cloud is on top of you, is bearish. The cloud is below you, is bullish. Okay. Then we use Fibonacci. Very advanced, but if I were to tell you, it's one of the few leading indicators out there. Very, very effective. Fibonacci. Price is lining up right there at a 23% Fibonacci retracement. And it also happens to line up with the 61.8 projection, 78.6% Fibonacci projection, 61.8 retracement. Don't worry about this. Very complex, but I will teach you how you can learn more about it later on. Okay. Notice what I have then is instead of I call it stacking probabilities, maybe by itself, right? So let me just have it over here. Like if it's just a pullback resistance, maybe we have a 30% chance of being profitable, right? With channel momentum, we have a 10% chance more. With a long-term Fibonacci retracement, we have another 15% chance, slightly better of being correct. If we have a short-term Fibonacci retracement, we have two of it, so maybe we got 10%. 10%. We got a Fibonacci projection, not bad, maybe 5%, right? And we got the Ichimoku cloud, another 5%. Another 5%. Notice that by itself, right, it is unlikely to be profitable. But if you combine them, you got 30, 40, 55, 65, 70, 75%. Maybe you have a 75% chance of being profitable if you combine it, stack probabilities. All right. The key thing that you need to take note of over here, do not stack from the same camp. Okay. Do not stack from the same camp. What I mean by that is that you want to avoid stacking like Maybe I just type it here. Stochastic, RSI, MACD. They are from the same camp. They're oscillators. Okay. So this is like this is camp 1. All right. Then we have camp 2. Maybe we have a moving average. Moving average. We got exponential moving average. We got weighted moving average. Right. We got Ichimoku cloud. These are from the same camp. Right. They are all interpretations of moving average. So even if you have 4 of them, that does not mean that you are you're adding probabilities, right? You pick one from here. You pick one from here, right? Then maybe you pick one more, like a trend line channel. You pick one from there, right? You don't pick all of them. Now, after that, right, you go the Fibonacci camp, right? Fibonacci is the same as harmonics, so don't get them confused. I mean, there's a lot of similarities, so you don't overload on them. So notice what we're doing is that we get it from the different camps. We basically take one from here, right? Take one from here, take one from this camp, take one from this camp, and take one from this camp, right? And if they all line up together, then you can stack your probabilities like you did over here, right? You don't take 4 of this, like, oh, I got the 100 moving average, the 100 exponential moving average, the 100 weighted moving average. The price is below all of them. Hence, I'm stacking probabilities. That does not work. You need to take it from different camps. Okay, very important for you guys to know. That's one of the secrets to being a profitable trader. Okay, then from there, right, you put the entry. I teach you how to put the stop loss, and then you put the take profit. Okay, I'll explain stop loss and take profit, a position management later. Right? If you ever felt like you got stopped out and then the market goes back in your favor, I can share with you how why it happens. Right? I can share with you ways to like overcome it. Risk management. Okay. I hope you guys don't mind participating with me a bit over here. Right? Let's just say this is a roulette table. Okay. This is a roulette table. You have $1,000 to bet on this roulette table, and you can only play one time, right? You are going to bet on black. Bet on black. How much would you bet? How much will you guys bet? I just want to get a gauge on like the risk tolerance of everyone here. If you don't mind sharing, like how much will you bet on black if you only had one chance to play? All right, we got Chiwa saying $200. Anyone else? Going to tell me how much? So $200 is about like 20%. Hazelin, wow, it's $500, like 50%, right? On black. Okay. Anyone else go and tell me how much you guys are gonna bet? Right, Benito, 10%, okay, which is about $100, right? On black. Right, Dennis also $100. Okay. Now, if I change things up a bit, all right, Judy's also at 10%, $100. Quite a number of you guys are betting like $100. Got Mervin at $50, which is about 5%. Now, if I change things up a bit, right, same thing, but this is the new roulette table. You got 32 black and 4 red. How much will you bet on black? Same thing, you can only play once. She was all in, right? Because you probably have like a 90-something% chance of being correct. 5, or close to 90% chance. What about everyone else? What about Hazel? Benito? How does it change for you guys? Well, Mervin still, right? Tripled, right? So it's from 5% to 15%. Dennis goes to 250, right? You got Shibata at 75%, Judy at 80%. A lot more. We can all agree that's a lot more than previously, right? Hazelin's still 500, right? Yeah, Hazelin's still 500. Why? Why Hazelin? Why still 500? Why aren't you going to bet more? Right? They have a very, very high chance of winning. Right? Or maybe you should be betting less in the previous one. Benito increase it from 10% to 30%. So what I want to share with you guys here is that as the odds of you being profitable increases, so should your risk allocation. As the odds of you guys, as the odds of a trade increases of being profitable, so should you increase your risk allocation. So in trading, it's not about just placing one lot every time you trade or 0.1 lot, right? It's not about just randomly placing a number. How good a setup is would then determine how much you want to risk on it, right? Trading is not binary yes and no. There's a lot more that goes into trading. Yes, no, there's a no and yes, and how much of a yes. If it looks so nice, everything is lining up, you risk maybe 2%, 3%. If it just meets the minimum requirement, maybe 1%. All right. That's a mentality that you need to take when it comes to trading, right? When it comes to trade management. Okay. Moving on from there. Trade management. Okay. I want to share with you guys that there's a lot of things that goes into trade management. Entry, stop loss, take profit, break even, idea and validation. So you notice all of these are as important as trading itself, right? As an entry itself. If there's one thing I want you to take away when you go out, when you enter a trade, is that try to keep your stop loss beyond a key level and take profit before a key level. Stop loss beyond, take profit before, because you want to get out here just before the fight happens. And for stop loss, you want to give it a little bit of breathing space. Let me show you what I mean, right? So this is an example over here. We think that price is going to go up, right? You can see price has made a breakout over here. We think price is going to go all the way up. Our strategy. So if you ever have a strategy that you learn from Forex Factory or YouTube that tells you to have like a fixed 50 pips or 100 pips stop loss, I can almost guarantee you that that strategy doesn't work, right? Because it shows the mentality behind the strategy is that there wasn't proper thought process put behind it, okay? Because in this situation, you are putting your stop loss. Let's just say you have a 100 pip stop loss, right? And your stop loss lines up right about over here. This is a 100 pip stop loss, right? And your stop loss is right about here. That puts your stop loss right above this major swing low. This major swing low over here. You got your stop loss over here. Very dangerous, because you don't ever want to put your stop loss before a key level. What tends to happen, right? What tends to happen is that price, in this case, you see price comes all the way down, it touches your stop loss, and then it starts to reverse in your favor. Does this seem familiar? Right? And if it does, it's because your stop loss, you're putting it right at a key level. What you should do instead, put your stop loss slightly beyond a key level so that you have that little bit of breathing space. That does not mean you won't get stopped out, but that increases the chances of you not getting stopped out right when price is going to reverse. Never ever put your stop loss at or even before a key level. All right. A lot of fighting happens there. It's a magnetic level. More often than not, price might touch it and reverse. Give it that little bit of breathing space. Okay. Same thing as take profit, right? Mervin, good question. Would you put another trade near the stop loss to enhance the risk to reward? Only if that only if a setup happens to be at the stop loss level. I will not trade just based on the stop loss, because that is revenge trading, right? You could, for example, over here, you could be taking a trade over here. If your trading strategy is one where you are playing the bounce from like minimally, you need like two swing lows, right? One swing low over here, second swing low over here, right? And your strategy takes the trade from the third swing low. If that is your strategy, yes, by all means take the trade. But don't just put a trade there just to get a better risk to reward. it still needs to meet all your requirements for and all your criteria for a trade. Okay. Now, take profit placement, same thing, right? We are looking to sell over here for price to come down to here. You can use Fibonacci to fine tune it and notice how I move my take profit up to here. It was previously down here. I fine tune it and I'm putting it right at the key support level. Instead, I move it right before a key support level. What happens? Price comes all the way down, touch the take profit, and then it goes off. It never comes back down again. That's what price likes to do. Price likes to come down, almost reach your take profit, then it reverses. Then you look at it and like, oh man, market is being manipulated. How does it do that? That is not what's happening. It is purely a case. All right. It's purely a case of like take profit and stop loss position management. Okay. So put your take profit, adjust your take profit to be before a key level. For me, I use support resistance. I use Fibonacci to fine tune it. I can teach you guys soon on how to use it. Okay. Next thing, you don't set a daily target. Okay. This is one of the biggest problems, right? A lot of people, right? Sorry. Let me correct myself. You should not set a daily target. Okay. A lot of people think that trading is like a business. They read it somewhere on some Instagram post that trading should be treated like a business. You need to have daily targets. You need to have weekly targets. You need to, hit your targets to treat it seriously like a business. Now, if it was the weekend, you guys, and I told you, all right, it's Saturday. I want you to make 1% on the market today without trading crypto, right? You look at me and you say, that is madness, right? Why would I, how can I trade on a weekend? The markets are not moving. It's the same logic. If the markets are not moving on a weekend, you don't trade. If the markets are moving slowly and are hardly moving on normal days, on a Monday to Friday, that doesn't mean that you should trade too, right? You should not trade it. Only trade what the market gives you. If you give yourself an arbitrary self-imposed target, right, that puts unnecessary pressure on an already stressful trading environment. You're supposed to hit 1% for the day. You made 0.8%. It's 11 p.m. at night. You're actually profitable. You're happy. You should be happy. But you're like, oh man, I need to hit 1% to be a profitable trader. You start looking for the last 0.2%. You compromise on your trading strategy. We've all been there. Start chasing trades. You lost one trade. You're down at 0.5%. You're like, oh shit, I should have just stuck to 0.8%. Chase it again. You're down to 0.2. Chase it again. You're negative 1%. Revenge trading, negative 10. All because you gave yourself a self-imposed target, right? That actually means nothing. It's good to have a gauge that I should, maybe try, but you should not set a target for self, because if the markets are not moving, if the market is not presenting you with the opportunities, why force yourself to trade? So good traders don't set a daily target for themselves, right? Look at Axi Select, right? We don't limit you to familiar, right? Yeah, perfect, right? So I'm glad a few of you guys resonate with it, right? It's always towards the end of the days, right? So the interesting from a psychological perspective is that our brains are like muscles. You notice at the end of the day, you just want to unwind, just get a beer, whiskey, like relax, so that relax, right? It's because he's tired. It's the same thing as muscle. You try to do like how many bicep curls or how many push-ups or sit-ups, you get tired after a while. Same thing as the brain. Towards the end of the day, it gets a little bit tired. It tends to compromise, right? Last time you do a bicep curl like that, you start to bend your body, try to lift it up. The brain also tends to compromise to try to find easy ways out when you're taking a trade and it's tired, right? So towards the end of the trade, personally, I feel like no good decisions come after 11 p.m. Just go to sleep, right? Another day to trade, another day to make money, right? I mean, Dennis says he stopped trading after I hit 5%. As long as you can hit the 5%, right? If you have 4.9, if you have 4.9% for the day, right? And it's 2 a.m., you're so tired. You should not force yourself to try to hit that 5%. You're going to start compromising on your trading strategy. You start going down to the lower time frames. You start taking wilder trades. You start going to instruments that you never traded before just to chase that, right? Trade what the market gives you. Okay. Don't unnecessarily put a stressful target on yourself. Okay. Oh, for the month, not for the day. All right. Even then, for the month, not a good idea, right? It's a good thing to aim for, but not to set a target for yourself. Good to aim for 5%, but don't live and die by it. Okay. Last thing, coaching. It's good to have a coach. It's good to have like me, for example, teaching you guys how to do it, right? Helping you all learn faster. Okay. I don't offer training courses, right? I know, of course, I don't do that, but you can find me and can find my team somewhere. And that is in the Axi Select community. Perfect place. Let me show you how that looks like. It's a free community for you guys to join, right? I'm going to share my window for you guys, right? Rather, you go to select.axi.com, or when you log into axi.com, you should be able to access the community. In this community, right, you see me over there, right? You can see all the latest news that we're sharing, right? Two things you need to learn. Firstly, right, three things. I teach my 5-step reversal strategy in a lot more depth in there, right? I teach you how to do a Fibonacci deep dive, everything. That's why I told you I will teach you. Go into the Axi Select community, you can watch it in there. That's the first thing. Second thing, if you have questions, right? If you are looking at a particular level that you need help with, right? Go in there and ask. What I mean by that. You can come in here and you're looking at euro dollar over here. You are wondering if this is a breakout. Come in here and you can say, hey, Ed mentioned, hey, Desmond, you know what? Yeah, hey, Desmond, right? Do you think this is a bullish breakout? What am I referring to? Highlight the text. Click on this little button at the corner, link object to text, and select the object that you just drew. Okay. Once done, click confirm and you send a message. What happens if someone is reading it for the first time? They say, do you think this is a bullish breakout? When they hover their price over it, the mouse over it, you can see it lights up on the chart right away. Okay. So I know exactly which level you're referring to. And I can tell you, right? Maybe I go into discussion here. Price has closed over it on the H4 chart. Good chance of a bullish breakout. For example, this is how we can do it. If you want to ask a specific level, this is the place for you to ask it. Okay. And if you want to practice your analysis and for me to correct you, right? If you want to see if you're doing support and resistance correctly, right? If you want drawing, like after you go through this reversal strategy course, you want to click on this thing on the left that says charts. What can you do over here? Same thing, maybe on the 4-hour charts, right? And you draw the line over here. Over here. Sorry, just let me delete that. Maybe you draw a line over here. Okay. If I feel that you drew it wrongly, right, what will happen is that I could move it to maybe over here. To reference that, you actually, move it to, I'll move it to over here. So it's more easier to see. You notice that when I hover my mouse over the right panel, it shows you where the original position was and where I moved it to. So this allows you to see where I'm editing the charts. It could be me, it could be Peggy, it could be Ketan, it could be Greg, it could be a whole bunch of us, but professional traders. It's our perspective on where maybe you can be adjusting the lines a bit. And I will tell you over here, maybe it's like, maybe this level instead, right? So that you know, okay, if I were to draw a support level, I'll probably draw it over here instead of over here. Okay, very good for practicing your analysis. And if you want us to take a look at it, just ping us. Very might not be able to respond right away, but it's more useful in correcting, practicing your technique, your technical analysis, and see if you're doing it right. Okay, so there are two things. If you want to ask about specific level, go to the chart channels. If you want to practice your analysis, come to the charts here. Okay, so all you need to do is to have an Axi Select account. So as long as you're Axi Live client, Axi account holder, join Axi Select program is free. You just need to have 500 USD in your account, and you should be able to get access to this. Okay, guys. Now, we have a bit of time. I'm going to open the floor to questions. Right? Is it in the Axi website? Let me see. How you can get access to this, right, is on axi.com. I might just show you guys. Login. I think this could be my login. I'm not sure. I think it's 60 days, right? Because you're not paying anything. It's not like those prop firm programs where you pay and you get funded right away, right? It's if you have like an account with another broker, it's just a perfect place to open. Where is it? Yeah, Axi Select over here. Perfect place to open your account, right? And there you go. Enter the trading room. You click on it, and it'll take you directly into there, right? And as you pass, you can see it rise over here, right? It's much better because if you fail at one stage, you go back down one stage. They will not kick you out of the program right away. Anyone who is serious with trading, right? You naturally know that one bad trade doesn't make you a bad trader, right? Sometimes you just need to regroup and try again. Okay, so that's why it's a slightly longer process, but you can manage up to $1 million just by trading well. I really think it's it costs you nothing. It's free. As long as you have a funded account with Axi minimally 500 USD, you'll be able to get access to it. Okay, so that's how you get access to the Axi Select room. Come in here and click enter the trading room, and you'll be taken right here to have a chat with us. We have XP, right? You can see if I'm interacting with stuff, you have XP over here. And this month, we'll be launching iPhone prizes to be won and $100 gift vouchers, right? So the more you participate, the more you can use those XP to redeem iPhones, iPhone 15, if I'm not wrong, and $100 gift vouchers you can use on Amazon and stuff like that, right? So we're gonna throw in a lot of prizes into this community soon. Hope to see you guys in there. Okay. Does anyone else have any other questions for me? Okay. I don't think anyone else has any other questions for me. Okay, I can see Benito asking 1 hour time frame. For beginners, I would say 1 hour and 4 hours better. Stay away from the 5 minute and 15 minutes because there's a lot of volatility, right? A lot of volatility there. Things can get very, very messy, right? So you try to stay away from the very, very small time frames. 1 hour, 4 hours, and 1 day time frames. The higher the time frames, the better. Question from Dennis: how soon should I place my break even? Break even is determined by price, not time. Okay. So for example, if I was trading here, right, and I was going to buy over here, so price is broke out, price is moving in my favor. How soon do I decide to move my stop loss to break even? Maybe my stop loss is over here. My stop loss is over here. I'm going to put it in red. How soon do I decide to move my stop loss to entry, my break even over here? It should be determined by price, right? So let's just say, so higher time frame, let's just take a look at it. Maybe I'm playing a move and I notice that my next risk level is, well, not many risk levels over here. But let's just say I notice that there's a big resistance maybe over here. Or let's just say it's over here. If I identified this as a big resistance level, I would use this, right? And maybe my final take profit is all the way up here. My final take profit is all the way up here, right? I might put this as my break-even level. Break-even is basically a level where when price comes to, right, you are recognizing, I need to pick a different color. You are recognizing that it might reverse down And you still have a long way to go to maybe come all the way here, but it might reverse down and might hit your stop loss. It's a key level that needs to be broken for price to rise up further, right? So that is the level where you usually move your stop loss, right, to break even. Is you're recognizing a risk. If price doesn't break there, it's going to come down. And I don't want to get a full stop loss if it comes down. You need to think about it from this perspective. Break-even pricing is not based on time, it's based on price. Okay, it's a level where you recognize there's risk. Price might not break there. If it breaks there, that's great. But if it doesn't, get me out at break even. Okay. Any other questions that we have? If you have, if you have an Axi Select account, you can come in here. You can just come to general chat. You can talk to me in there too. I'll be glad to reply you guys. All right. And if there's no other questions, thank you everyone for tuning in into today's session. We're going to do a weekly session, right? Next week, it'll be Peggy who'll be coming. She passed a prop firm challenge 15 times so far. She has a gold trading strategy to share with you guys. So do go sign up for that webinar, right? Very, very useful tips on how to trade very profitably. All right. Thank you, guys. How do we know when are the seminars? That's a good question, right? I think it should be on the Axi. You should receive an email from Axi, or you can ping their live support. Yeah, I think you should ping their because we're just launching this, so maybe it's missing, right? So I will tell them to put it online. But for now, that's where webinars, is it me? No, these were webinars in the past, I think. Nah, you guys should ask the live support. Go ask live support what's the link for next week's webinar, right? And you can join it, right? I think they haven't put it on the website yet. Good point. I'll ask them to go put it on the website. Okay. All right. Thanks, guys. Thanks, Dennis. Thanks, Benito. Thanks, everyone else. It's been great chatting with you guys. I hope to see you guys in the next webinar, right? And remember, stay safe, trade safe, right? And if it's not me, right, it's Peggy, right? I hope to see you in the next session. Okay, guys, take care. Bye, guys. Bye. Thank you.